At Kadel Labs, we pride ourselves on being people-centric, encouraging creativity, communication, and continuous innovation to deliver impactful products and services to our clients. Today's session is a part of our ongoing effort to address pressing challenges and explore transformative solutions. We are thrilled to introduce the topic AI in mortgage fraud detection and prevention. The mortgage industry faces challenges in detecting and preventing fraud, and this session delves into how cutting edge AI technologies are reshaping the landscape. Today's discussion will provide you valuable insights into overcoming traditional hurdles, leveraging AI solutions, and fostering a more secure financial future. A quick note to participants: actively participate by dropping questions in the chat or QA section. We'll address them during the interactive end of the session. Thank you for joining us. Let's explore the transformative power of AI in the mortgage industry with Pratik. Over to you, Pratik.
Thank you, Shama. Good evening. I'll be presenting my screen. Is my screen visible?
Yes, Pratik, it is.
Good evening, everyone. This topic, AI in mortgage fraud detection and prevention, has been used in HSBC and Wells Fargo. AI is evolved in the mortgage industry. It is not only detecting fraud, it is also reducing manual work and documentation. Agenda for today's webinar: traditional challenges in fraud detection, advanced AI technologies for mortgage fraud detection, what technologies we are using, AI, we are also using blockchain, and how these technology actually incorporate into the banking industry and it reduces the traditional challenges. The third would be case studies. We will be having two case studies, which one is of HSBC and the second would be of the Wells Fargo. Moving on to next, we have AI role in preventing a 2008 financial crisis, and that's one of the biggest financial crisis we have faced, and we can understand how these type of crises can be faced with the help of AI and how AI can reduce it. Next, future of mortgage lending with AI, and then we would be closing with questions. Moving to traditional challenges, is my screen visible?
Yes, Pratik, please go ahead.
Traditional challenges in mortgage fraud detection. Inefficiencies and vulnerability have long. First, we have the manual document verification. Lenders rely heavily on human verification, which actually slows down and are prone to errors. Fraudulent documents can often be noticed. Complex fraud patterns such as synthetic identities and falsified income. We actually do get calls from other people claiming that they are from the banking industry, but it is not so. We can reduce this with the help of AI. Inconsistent detection methods. We have variability in fraud detection process across branches or regions, which actually weakens overall security. Let's suppose in banking we have different branches. In the head bank, maybe we have the world best class facility for security, but when we are coming into remote areas, we may not have that much of resources. So how AI would help us in balancing the security to overall branches, let it be a remote or head office. We have high compliance costs since manual work is required, so the cost is also high. We have to meet the regulatory requirements in both, which are both, of course, time consuming and expensive. We have operational inefficiencies because humans are involved and human labor is involved. So these are the type of delays which impacts the loan approval times, which reduce the customer satisfaction, and of course increase the overall cost. So these challenges have underscored why traditional methods can no longer keep with modern fraud tactics, because in this era we require everything to be very fast. And how AI can help this, let's see in the next slides. So the next slides talk about advanced AI technologies for mortgage fraud detection. Artificial intelligence is an umbrella. And inside that, we have various tools and processors. First, natural language processing verifies income and employment details with very prescription. Machine learning. I will be talking about machine learning, but also in natural language processing, machine learning models are used, and we teach the AI about sentiment analysis and natural language of humans. It verifies income and employment details with precision. It speed ups the review of complex documents like tax returns and financial statement. Let's take an example of automating the process of thousands of application days without error. When we are talking about AI, so since there is no human and so there is less chance of having an error and operational efficiency would be increased, and of course the cost would be reduced. Coming to machine learning model, it identifies the fraud patterns based on historical data. Learning from past data, how much fraud have been detected, what kind of frauds are there, the pattern of fraud, if they are from a particular region or scheme. These methods can be learned by the machine and it could be used with natural language processing. So it would continuously improve by learning from new data and from historical data, and it would adapt to emerging fraud tactics. Coming to predictive analytics, in analytics we have analysis. It will predict fraud. It will identify high risk or high flag behavior before they result in fraud. So if is a loan account is reducing significantly, and by the time that the machine knows that this customer would not be able to do this, it will raise a flag, and humans can intervene. Predictive analytics can be used. Coming to the next slide, we have anomaly detection algorithm. As I said, in predictive analytics, flags can be raised. In anomaly detection, predictive analytics and anomaly detection together can raise the flag. So flags are unusual behavior, changes in income or spending habits. Coming to blockchain integration, we provide a secure error-free record for transition, which ensures the transparency, and it prevents tampering. It prevents data tampering, and it ensures the data security. So these technologies work in synergy to make fraud detection faster, smarter, and more reliable. Coming to the next slide, the Wells Fargo. So Wells Fargo is the number third bank, and how Wells Fargo actually faced challenges and how they move to incorporating AI into their system. So the first challenge is risking mortgage fraud cases. So there were more fraud cases due to undetected complex schemes. There were many frauds, which was of course not possible for humans to detect. We have manual verification delays, dependence on manual checks, which slowed down the loan processing. Now coming to high operational cost. So since humans and human labor is involved, so we have a high operational cost, which the high resources are dedicated to fraud detection, and the main core function of the banking industry is not done. We have customer satisfaction, which was very much impacted because we have lengthy approvals since the operational cost was high, and the manual verification, it adds to the lengthy process for loan approval and load to potential loss of business. Now coming to HSBC, HSBC is also a renowned bank. The problem statement here was that it escalated mortgage fraud cases. When I'm talking about these fraud cases, we will understand that now this is from one bank to another bank, and we may find that okay, this is a problem of only one bank, but when all of these banks come together, or and the frauds are higher, there the 2008 financial crisis AI could have helped. So for HSBC faced escalating mortgage fraud cases. We had lengthy manual verification with high operational costs and inconsistent fraud detection. Keywords: manual verification, inconsistent fraud detection, high operational cost, which altogether can be reduced with AI. And of course, since we have a lengthy process, the customer satisfaction ratio is down. So people may not prefer the bank again, which was the customer satisfaction ratio was reduced due to high operational cost and the lengthy process, which extended the loan approval time and compliance challenges. Coming to the next slide, what did HSBC do? So HSBC incorporated AI. This was the first bank which incorporated AI before Wells Fargo. So it had AI powered fraud detection, which leveraged machine learning to analyze the borrower pattern and identify potential fraud. After it had detected, we had predictive analytics, which implemented the predictive models to proactively flag high risk loan applications. Sorry. Coming next, we have automated document verification, which of course reduce the operational cost and lengthy process. We use natural language processing and computer vision to streamline income. and employment verification. All the verifications, all the documentations were happening through AI. So the process was crisp and it was much more accurate than the manual one. And we have real-time monitoring. So it is very important in banking sector to monitor every step uh, to understand that at which step the fraud is detected and how we can secure that. We track borrower data to detect errors instantly. These were the solution. What were the impact? So we understood the problem, we understood the solution which were impacted by HSBC, but it is not worth if they don't give us that amount of results. So coming to numbers, 50% reduction in fraud related losses. We had significant decrease in financial losses due to improve detection. Second data point, 35% faster loan processing, which of course increases the customer satisfaction ratio. We had streamlined process, which led to quicker approvals and fewer delays. Since we have faster loan processing and low fraud, customer satisfaction increase. We had faster, efficient, and which processing improved the overall customer experience. And yes, since incorporating the AI reduced the manual work, so the operational cost was also reduced, which of course generated revenue. Automation minimized the manual labor, cutting costs associated with fraud detection and compliance. Moving to the next slide, the 2008 financial crisis highlighted the severe risk of inadequate fraud detection and oversight. What was 2008? We had subprime mortgage risk, excessive lending to high risk borrowers who lacked financial stability. Lenders issued these subprime mortgage without adequate verification. No, as such verification was done about the income statement or the credibility of the borrower. We had lacks of oversight and misinterpreted data. We had fraudulent borrowers which provided us fake information, which went unchecked due to reliance on manual process since human were involved, and a lack of robust fraud detection tools. That time we don't have AI. It was all manually done. We have system failure. We had no real-time monitoring. Lenders and regulators couldn't detect emerging risks in the housing market. So the subprime mortgages and the housing market are related, which lead to the collapse of financial institution. And since it happened in US, so it impacted the global economy. This crisis serves as a reminder that a systematic process could have saved us from this crisis. So how AI could have prevented the crisis? Oh, yes. Automated fraud detection. AI, we could have identified fraudulent actions in real time by analyzing the inconsistent borrower data. Let's take an example of detecting the borrower with overstated incomes or fabricated assets at the application stage itself. So it would have reduced subprime loan approval. Coming to second part, the natural language processing verification for data consistency. AI-powered tools verified borrower documents like pay and tax return, ensuring they match their financial record. And this could also have eradicated the misinterpreted data, which could have caught early preventing loans based on false claims. Coming to the third part, continuous monitoring with machine learning models could have tracked systematic risk and evolving fraud beforehand, such as increase in subprime loan defaults. We had real-time insights on would have allowed lender to adjust to lending criteria before the crisis even escalated. We could have caught the problem in the first stage. Predictive models could have provided actionable insight by forecasting the risk in specific regions or demographics based on historical data. Let's take an example of early warning for housing bubble in high risk area would have prompted regulatory interventions. Coming to outcome, if AI had been integrated into mortgage lending practices at that time, we would have fewer fraudulent approvals, which of course involves the high risk borrowers would have been identified and filtered out during the application process itself, which would have reduced the operational cost and manual labor. We The second point comes to reduce risk of market collapse. Early detection of systematic issues could have mitigated the spread of financial instability. improved confidence in financial stability. So all the stakeholders, the lenders, investor, and regulators would have greater trust in the mortgage market. We had resilience, preventing panic and market freeze. AI is not just a tool for operational efficiency, it's a strategic necessity for mitigating financial risk. Imagine how different the global economy would have been if these technologies have been available and implemented in 2008 itself. The lesson from the crisis is prevention is better than cure. AI empowers us to be proactive rather than reactive. Next, we have technical breakdowns of AI applications in mortgage fraud detection. Each technology plays a role in enhancing detection accuracy and operational efficiency. Starting with the first, the natural language processing. So, natural language processing automates the extraction and analysis of borrower details from documents such as income statement, tax returns, or property deeds. It ensures consistency and accuracy, detecting any error between submitted data and data. Coming to the machine learning model, it analyzes large volumes of historical and real-time data to identify patterns which are linked to fraud, such as repeated loan applicants from different identities. We have the system to continuously improve the learning from new data to adapt to emerging fraud tactics. The third one is error detection algorithm. These algorithms actually monitor borrower behavior in real time, identifying sudden changes or irregularities like abrupt income rise or spending patterns. They help the lender act immediately to investigate or halt suspicious activities and raise flags. Predictive models forecast potential fraud risk based on the historical data and real monitoring of the borrowing behavior, of the spending behavior. These models allow lenders to adjust strategies, tighten loan terms for high risk profile. So we have high risk profile and we have low risk profile. Compliances can be made towards the high risk profile and we can adjust the loan terms for these. Coming to blockchain integration, blockchain actually secures the mortgage transition with immutable records. It ensures the transparency and data integrity. Another wonderful thing about blockchain is it prevents tampering, as all transition data is permanently stored and easily auditable. We have future of mortgage industry with AI. The mortgage industry is undergoing a significant transformation with AI at the center of this evolution. The first one is scalability. AI allows the lender to process growing loan volumes. As an example, I told you that let's say if you have to process 10,000 loan applications in a day, error-free and accurate, is very difficult for human. The scalability factor of AI comes into picture. We can actually scale this. It allows substantial utilization of resources during peak times. We have like in Diwali or between the festive season, we have housing market booms and AI ensures that application workflow remain uninterrupted and efficient during these times also. The scalability empowers smaller institutions to compete with larger ones by automating resources. Coming second to enhance fraud detection. The fraud detection will evolve with smarter algorithms which are capable of adapting to new schemes. Machine learning models based on the historical and real-time monitoring enhance detection. Adaptability is critical as cyber criminals increasingly exploits the digital platform, every digital platform. Improve compliance. We have regulatory requirements since we are uh, working with banking industry. We have regulatory requirements which are only becoming more complex, but AI actually simplifies the compliance. It automates the checks and ensure all transition meets the legal standards. For instance, if we have a financial audit that used to take weeks, can now be completed instantly with AI providing detailed compliance report. This not only reduced the penalties for non-compliance, but it also built trust with regulators. The fusion of AI and blockchain actually enhances the mortgage transition security and transparency. Blockchain have provided immutable records, ensuring data integrity, while AI detects error in these transition. For example, We have fraudulent property ownership claims, which can be prevented by validating records on a blockchain. Next, we have data-driven decisions. So all the decisions, all the steps, all the actions, these are data-driven. So AI allows lenders to analyze the borrower data comprehensively, which enables the accurate risk assessment and personalized loan offering. Let's imagine offering borrowers customized loan terms based on their unique financial profile. It actually improves both satisfaction and profitability of the bank. This approach reduces the default rate and ensures better portfolio management for lenders. We have proactive risk management. AI doesn't just respond to fraud, it anticipates it. We have predictive analytics, which allows lender to foresee potential market risks and adjust their strategies and minimize the exposure. For instance, if a region is showing high rising default trends, lenders can tighten approval criteria in that area. So the future, it's just not about the fraud detection, it's about redefining the mortgage experience for both lenders and borrowers. AI will drive faster approvals and enhance security, a win for everyone. As lenders adopt these innovations, they can focus on building trust and transparency. Two critical elements will shape the customer relationship. Now we are on the conclusion slide, but I would like to hear what actually have you concluded from this webinar and or from all these slides.
Yes, Pratik. So I think we can proceed with the conclusion.
Since we have studied, we have seen NLP, we have seen the mortgage industry, we have seen the predictive analytics. What conclusion are we driving? We have AI in mortgage front detection by automating the query processes. We have improving accuracy and reducing operational costs. Its implementation actually enhances the efficiency and compliance, which mitigate the risk, preventing future financial crisis and ensuring secure. And in the last slide, which I actually spoke about, the transparency and trust, which is very much important in banking industry, can be enhanced with AI. Coming to the next slide. Any questions or anything to discuss or you have learned from this webinar regarding the AI, mortgage,
Yes,
or
Pratik, it was a wonderful session on AI in the mortgage industry. We have a few questions from participants. The first question is, are there any risks associated with over-reliance on AI in the mortgage industry? This is the question from one of our participants.
when we are relying too much on technology and less on human intervention? Let's talk about blockchain integration for any AI model. So we have blockchain integration, but if we are relying too much on blockchain and human intervention is less, so it is very easy for cyber criminals to tap into it because there is no compliance on how we are using the AI. But human intervention, since banking industry, we have documentation, we have loan approvals, we are actually connected to humans. So over relying on something would tamper this banking industry. But a regulated use of AI is what we are looking in the banking industry. We have cybersecurity. No matter the cybersecurity is best, but there would be a time when cyber criminals would be able to actually hack the AI and reduce efficiency of AI. So that's when the human intervention is needed to regulate these terms.
Thank you,
I
Pratik, for
hope I
answering
answered the
that
question.
question. We have one more question. Are there any specific tools or platforms you recommend for beginners interested in this field, or any resources or courses you came across when preparing for AI and applications in finance?
Okay, if we are talking about only in the banking sector, AI, so the understanding of how the banking sector works, it is very much important. It is not actually a course, but we can actually understand how the banking sector works. Coming to AI in banking sector, we have predictive modeling. I can tell you the name of the courses. We have predictive modeling, and now we have blockchain integration with AI. This course I would recommend for the people who are actually interested in AI and AI which integrated with finance.
Yes, Pratik. So I think you have answered all the questions. Thank you. Thank you, Pratik, for your time. And it was a wonderful session. And it was indeed insightful. About we got a greater knowledge and understanding about the AI functions, about the banking industry and everything. Thank you for your time. I thank all the participants for your active participation. Have a good
Thank
day.
you.